invest in and follow principles. That has proved to be pretty successful.
This landlord's gonna make almost $2 million over the next 12 years for doing something one time. And that's like residual. This guy's got another 7 retail spaces and he's got 10 stories of apartments above it. And I'm like, man, I'm on the wrong side of the coin, right? I need to own real estate, not broker it.
You start doing deals that are absolutely life-changing, like that put you on the path for intergenerational wealth.
Welcome to the Real Estate Home Runs podcast. I am your host, Louis Van der Horst. This is a podcast for busy professionals who want to learn about passive income producing strategies that have helped others crush it in the real estate world. Whether you are a new or seasoned real estate investor, this is the podcast for you.
And welcome to the Real Estate Home Runs podcast. Today we have Mauricio Rauld joining us on the podcast to discuss real estate syndications done right, giving us a behind-the-scenes look at the legal aspects of creating a syndication and giving us personal wisdom from his own experiences. Mauricio is the founder and CEO of Premier Law Group, specializing in securities law. Mauricio works with elite entrepreneurs who seek to increase and protect their wealth through syndications and specializes in Reg D exempt offerings and educates investors from around the world on how to navigate the complex world of security laws. Known for taking complex matters and making them simple to understand, Mauricio is sometimes jokingly referred to as one of the few lawyers who actually speaks English. Regularly traveling around the U.S. as a noted speaker to business groups, including for Summit at Sea, Mauricio is also a regular contributor to the Real Estate Guys radio show, consistently one of the most downloaded podcasts on real estate investing, and is Robert Helm's personal advisor. He also joins Ken McElroy and the Real Estate Guys teaching students in the course Secrets of Successful Syndication, a comprehensive course on raising capital for entrepreneurs. We're really excited to have Mauricio and hope you enjoy and learn a lot from the podcast.
All right, everybody. Welcome back to the Real Estate Home Runs podcast, where we talk about singles, doubles, triples, and home run deals or even experiences in real estate. And today we have a very special guest, someone that I feel like people pay a lot of money to go see. But here he is to share some knowledge and wisdom with us. And I hope you guys have a paper and pen to take some good notes. Mauricio, thank you for joining us.
No, thanks for having me, man. Looking forward to this conversation.
Same here. I'm excited. I feel like you're well-versed when it comes to real estate syndication, being an attorney. We're going to have some good discussions. Tell us how you got started in real estate.
I almost didn't go to law school because I was excited about the real estate. And I grew up, to probably date me a little bit, but I don't know if you guys remember the Carlton Sheets and the Tommy Woo late night commercials, but there were a couple of famous late nighters. And I kind of got the bug during that time, to the point where when I graduated college, I was like, hey, do I go to law school or do I just go jump into this real estate thing? I ended up going to law school, which I think ended up being the right move. But I've always been interested in real estate. And it was that love of real estate or that interest in real estate that eventually got me connected with the real estate guys. I don't know how familiar you got your audiences with the real estate guys, but after I knew I didn't want to spend too much time in a law firm, I ended up going to work as the real estate guys as general counsel, Robert Helms, Russell Gray. They have a huge development company and a lot of other real estate businesses that they don't just have a podcast radio show back then. They have a big business. So I actually, that's where I kind of cut my teeth on the syndication world. I mean, I used to do securities work at the law firm, but that was all representing sort of the big brokerage houses, the JP Morgans or the American Expresses or the, Merrill Lynch's of the world. And it was all litigation and, they'd get sued and I'd defend them and all that fun stuff. So, but when I went to work with the guys, that's when they were doing a ton of syndications back then. So I started cutting my teeth in that world with them. First, as sort of their general counsel, we had an outside attorney that would kind of do all the syndication work, and I would be the liaison. And then after a couple of years, I just obviously picked it up and started doing it myself. And then after, 2 or 3 years of that, I decided to just start my own law firm. I was getting a lot of people approaching me that were part of their membership, and there's like, hey, can you help me do this? Can you help me do that? And with their permission, I was doing that. And it just kind of grew and grew and grew, almost like a little bit of a side hustle. And then that side hustle grew into its own, law firm business. And I eventually left the general counsel position with the real estate guys, kept them obviously as a VIP client, but then started my own law firm. Even though I started, I think in 2006, I didn't really full blown go, I think till 2007, I think is when I actually started to sort of taking on clients. And at that point, you just do whatever puts food on the table. It's not, I was doing all kinds of stuff. And as the years has gone on, I've really narrowed that practice. And, if you talked to me 10 years ago, I would have said, hey, I do syndication and I also do asset protection. So I was kind of an asset protection attorney as well, which comes in very handy for real estate investors. And then, I don't know, I think it was right about when my second daughter was born. So that was about 5 or 6 years ago. I decided to just go full-fledged into syndication. So today, my practice and our practice, the law firm's practice, is exclusively real estate syndication. So we help real estate investors raise capital from investors to go take down bigger deals, whether they're multifamily or mobile home parks or self-storage or what have you. And we don't really venture into anything else. Like if you call me and say, hey, Mauricio, I want to put together a cryptocurrency fund, I'm going to be like, it's not going to be me. I'll refer you out. Or if you want to do a huge, oil and gas exploration deal or a marijuana thing or whatever, we're not going to take that. We're really focused now on the real estate niche. And to be honest with you, I've been very blessed. It's been doing really well. And for some reason, it's been doing exceptionally well, post-COVID. Once COVID hit, as I can imagine, as you guys all know, being in the real estate world, everything froze, right? So back in March and April of last year, lenders, which you don't blame them. I mean, lenders put a stop to everything because they didn't know what these things were worth anymore. Because suddenly everybody was freaking out. I'm like, nobody's going to be able to pay their rent. Economic vacancy is going to be 50%, 30%. So literally for 2 months, lenders stopped lending. I had a lot of clients who, different parts of the process, but a lot of them were literally about to close in 2 or 3 weeks. Yeah. And lender says, we ain't closing. And I found out very quickly, and I'm not a real estate attorney, but we found out very quickly that those loan documents are very favorable to lenders. And they have these clauses in there that essentially lets them out of the deal for whatever and for any reason they want. And obviously they used that during the pandemic. So it's interesting. So we just like everybody else, I think, I don't say struggle. We struggle in the sense that we didn't have almost any business for that 8-week stretch. But then I don't know if it was just bombarded or what happened, man. But I tell you, on the other side of that, starting in like August and September of last year, has like been a springboard, and we've just been growing really, fast and hiring lawyers and stuff because there's just been I don't know what's going on with you guys out there, but there's been an appetite for acquisitions, and people are buying properties left and right, and it's as you guys know, a really, really hot market. And obviously, when you're syndicating real estate, you're going to need somebody like myself, and a syndication attorney and SEC lawyer. So we've been plenty busy, man.
That's awesome. It sounds like you guys have been steady since everything opened up.
Yeah, I've been very, very blessed. I know and I recognize that hasn't been the same for a lot of people. But I think most people on the real estate side anyway, again, most of my clients happen to be sort of multifamily, but they were all freaking out. I can tell you, if you talk to them back in April and May of last year, they were all peeing in their pants. But I think everybody's kind of come out. There's definitely some issues out there, but overall, I think most of the real estate world's been okay. A variety of reasons, whether it's been forbearances or whether it's been stimmy checks or whatever it is, we've so far been doing okay, but we'll see how long it continues.
Just in case anybody's listening that is asking themselves, like, what is a syndication? Would you mind, before the talk we share, that we're going to maybe go some high level?
Well, I think you're right. That's a good point, because most people who haven't heard the term, they think of a syndicate or syndication. They may think of reruns of Seinfeld or something as a syndicated TV show or a syndicated radio show or something. A syndication is just it's a simple act of pooling resources. So in our case, we're pooling money, capital, but you could be pooling all kinds of stuff, whether it's credit or, time or knowledge or whatever. But basically somebody gets together and pools everybody else's money and then uses that money to go buy something, right? So usually, in our world, it's real estate. So a simple syndication could be as simple as, I've got a house that I want to buy for $100,000. And I just get 4 of my buddies together. They all chip in $25,000 each. I buy the house and we split the profits 5 ways. I do all the work. They put all the money. And we split everything 5 ways. That's a very that's a very simple syndication. A lot of people fail to understand is when you're doing that, you're in the business of selling securities, which is kind of counterintuitive. It doesn't really make sense. You're like, wait a minute, I'm just buying a piece of property. Like, why is the Securities and Exchange Commission, the SEC, involved? I'm just literally buying a house. And the reason is because the definition of a security, which is really the syndication, is really broad, and it essentially covers any time that you take money from passive investors where the returns are generated by your efforts. You're doing all the work and the investors are just writing you a check. You're active, they're passive. That's going to be a securities offering or a syndication. And it doesn't matter how you structure it, whether it's an LLC or a corporation or a promissory note or a handshake or a tenants in common or whatever. the structure itself doesn't matter. It's what does that look like? If you're doing all the work and you're responsible for generating the return, even if there's only one investor, that's a security. And once that happens, that's when the compliance, I call it the compliance nonsense, but the compliance nightmare kicks in, because now you're forced to comply with all the federal rules out there, all the registration or exemptions or what have you. And then all the states, you got to worry about the state laws, which fortunately, most of the time we don't have to worry about the states completely, but we still have to be aware of them. So that's why people need somebody like me to come in and just make sure they don't step on the landmines and make sure they're able to raise that money in full compliance with federal and state securities laws.
People could see you for good things to stay on the good side of the SEC, or because they're in trouble, they need some help.
Anybody, I certainly don't go after people, but yeah, even if it's a client of mine that's that's never. Sometimes we get inquiries from the SEC or the states. They kind of do an audit on us. But even then, if it's something like that, there are attorneys who specialize in sort of defending against. We are purely on the compliance side, making sure it's set up properly on the front end. And honestly, if you set it up properly on the front end, even if you do have an audit or something, it's just like doing your taxes. You get audited, and you've got everything in order, and you got all your receipts, and you got all your tax, everything, all your T's are crossed, I's are dotted. It's a pain, but it's you just no big deal. You just provide everything. Similarly with us, the times that the people have reached out, SEC or regulators, we just send them all of our docs that we've created and all of the signatures from the investors, all the disclosures, and that's usually the last we hear of things. We don't really get into anything further than that. So, things have been going well though. I mean, in terms of real estate, right? I mean, we haven't had a good solid correction since 07, 08. So who knows what will happen next time we have the next correction?
Who knows? And it's not like a magic bubble that we can predict it, but not necessarily know truly what's going to happen. And what I love about real estate is that, in syndications particularly, is that it opens the opportunity for regular folks to be part of deals like that. Okay, let's take down 200 units, put all our funds together, and there are sophisticated and accredited investors. Would you mind sharing about the difference between those two and what will qualify someone to be an accredited investor?
Some of these deals or syndications are limited to accredited investors only. And for whatever reason, right or wrong, the SEC and the government believes that if you are an accredited investor, meaning you have a certain level of income or net worth, that for some reason you're more qualified and you're smarter or more whatever. I mean, that's really not the case, honestly. I mean, we all know people who are super smart and don't have much in the way of income or net worth. And we also know rich people who are the dumbest people in the room, right? So, but an accredited investor is anybody who has $1 million in net worth, excluding their primary residence, or on the income side, if they have earned $200,000 the last 2 years, with a reasonable expectation of earning that much this year. So we're kind of towards the end of the year here, but when this gets released, you'd have to have 200 grand, in 2019, 200 grand or more in 2020, and then have a reasonable expectation of earning at least 200 grand this year. And if you're combining your income with a spouse or someone, then that goes up to 300. There's a move lately to expand that a little bit more and get other people who are not necessarily on the financial side and get them involved. So the SEC has expanded the definition. And now if you have certain licenses, you're also an accredited. So if you're an investment advisor, for example, if you have a securities license and you're an investment advisor, then you're going to be an accredited investor. And the idea is over the next several months, although I've been talking about this now almost for a year and nothing's happened yet, but supposedly over the next several months, the SEC will come out with certain certification programs where an investor can go take a class, a course. I don't know if it's online or in person, but we don't know. We don't have any details. But essentially, they're going to be able to get certified as an accredited investor, take a course, pass an exam, get a certification from one of these approved schools or whatever, and then you'll have a certificate kind of thing, and that'll make you an accredited investor. But for now, it's mainly still on income and net worth versus a sophisticated investor who doesn't have that net worth or income, but has some level of sophistication, meaning they've got enough business and investment expertise to be able to determine the merits and the risks of a particular investment. And so some investments allow only accredited and some investments allow, non-accredited, sophisticated investors. And it just depends on what direction the sponsor goes.
And for anybody wondering what Mauricio means by sponsors, these are the people, the general partners who put the deals together, and the limited partners are the ones that bring it in, right?
That's exactly right. The sponsor is the one that puts, as we said at the beginning, the pooling of resources. The sponsor is the one that actually is in charge of pooling the resources, that putting this whole thing together. They're the quarterback, if you want to use that sports analogy. They're the ones that are putting that I like to call it a puzzle. It's so many elements, but it's the person that's putting together all of the pieces of the puzzle. That's what we call a sponsor, or some people call it a GP, a general partner.
Yeah. You mentioned the SEC. I feel like a common mistake that I see in young investors is that they will put things out there like, oh, I need funds I have this deal. I guarantee you 10%. You want to talk about that?
So the general rule is all of your syndications either need to be registered with the SEC, which nobody does, or you have to find an exemption, right, to that registration. And then my joke is always, or it's illegal, right? So those are your three options. Register it with the SEC, find an exemption to registration, or it's illegal. And so because nobody wants to register and nobody wants to do anything illegal, we spend all of our time trying to figure out what's the right exemption so that we don't have to register. And some exemptions, as we talked about earlier, allow only accredited investors, and some exemptions allow sophisticated investors. So it depends on what exemption you want to pick. And similarly, some exemptions allow you to go advertise on the internet, on social media, on podcasts, on the radio, on newspaper, whatever. And some exemptions prohibit that. So that's one of the first things we do with our clients is we sit down and say, okay, well, how are we going to go raise this money? This is the questions I ask my clients. Are you going to accept any non-accredited, or do you want to accept non-accredited investors, or are you okay just accepting all accrediteds? Because that'll guide us in one direction. And another question that I would ask is, where do these investors come from? Are they people you already know that you have pre-existing relationships with, or are all these complete strangers that you're going to get off Facebook or YouTube or a podcast or whatever? And so depending on the answers to those questions, we'll start molding and figuring out what exemption we're going to rely on. And fortunately, there are a lot of exemptions, but most people rely on one of two. And the most popular one prohibits advertising, right? So the most popular exemption out there is an exemption that's called a Rule 506B as in boy, which allows you to take a limited number of non-accredited investors, sophisticated investors, up to 35, but it prohibits advertising. And so if you're relying on one of those exemptions, you cannot go on Facebook and post or blast to a list that you don't really have relationships with and start telling them about your deal and pitching your deal, because that's against the rules of that particular exemption that you're going with. If you want to go do that, you got to pick another exemption, but then there's going to be other restrictions. That's part of the art, is trying to figure out what's the right exemption you want to do. And you mentioned the word guarantee. We would never use the word guarantee. I think Clint Eastwood used to say something along the lines of, if you want a guarantee, go buy a toaster or something. But we never use the word guarantee. There's a lot of words we don't like to use, but yeah, that has to do with the exemption. Most people pick exemptions that prohibit advertising or generally soliciting. You can't even go to a conference. We just got back from the New Orleans Investment Conference, and you can't just go get a booth and start passing out, your business plan or your pitch deck to people you don't know. That'll be called a general solicitation. For some reason, people don't listen or don't understand or what have you. And I don't know if they're just so comfortable with Facebook and social media, they don't think of it as advertising, but they'll guarantee you the SEC does. And if you end up pitching your deal, or even what we call condition to market, it's just posting. Maybe you're not posting directly about a particular deal, but you are getting people excited. You're saying stuff where you're like literally conditioning the market so that when you do have a deal, they're gonna be like, oh, I got to call this guy because he just talked about, how, he gets 20% returns every time he does a deal. And that seems exciting. And so that can be considered a condition to market, which is why we want to be super careful about using social media when we're relying on exemptions that prohibit advertising, because it's a slippery slope.
It's so easy to post on social media and feel like it's informal, but you never know who's watching. Yeah,
it's definitely not informal. I mean, unless you have a pre-existing substantive relationship with every one of your quote unquote friends on Facebook or LinkedIn connections or whatever, then, which I doubt, then you won't be able to put stuff that might be considered an offer to sell a security on there.
Yeah. And when we're talking about pre-existing relationships, that's phone conversation or meeting for coffee. Yeah. What does that look like?
Yeah, I mean, the SEC doesn't. They want to foster interactions. They want the sponsors to get to know the investors and make sure that they are sophisticated, right? That this is they're sophisticated, and B, that this is what we call a suitable investment for them. And the only way you're going to figure that out is talking to them, having them fill out questionnaires, having a cup of coffee. I mean, spending some time with them, right? And then the investor is supposed to talk to the sponsor and say, hey, what do you do? Like, what kind of investments do you make? How aggressive are you? How conservative are you? And so the investor then has an idea what the sponsor is. So what the SEC really cares about is that interaction, whether that takes 1 day or 1 week or 2 years, or that doesn't matter, or how many times. There's a famous no action letter called the Citizen VC no action letter, where the SEC actually lays out 8 things, 8 points or whatever that somebody did. And they said, look, if you do these 8 things, you're going to be good. You're going to have, pass the test, so to speak, of establishing a substantive relationship. But the main ones there was giving them a really detailed questionnaire, which I have a copy, which I'm happy to share with you at some point, and you can share those with your audience. Having at least one conversation on the phone, maybe 2. Even better would be a cup of coffee or lunch, but realistically a Zoom call or 2, and just getting to know them. And at some point, it's going to be subjective. At some point, you're going to say, you know what, I've spent enough time with this person. We've talked enough on the phone, or we've emailed back and forth. They've asked me a ton of questions. I think today's the day that I have a substantive relationship with this person. And once that happens, then you can offer them a future deal, because you do have to have a pre-existing substantive, when that pre-exists the deal. But it's all subjective, and it's all about documenting. So the whole idea, 5 years from now, if this person ends up being an investor in your deal and the deal goes south and the regulator's grilling you as to, hey, how did you meet this person? You should be able to go into your file and pull up, the questionnaire, the emails, the notes of your calls. I mean, have a pretty good idea of how you establish that relationship.
That's good. What are some books that maybe have helped you become so well-versed, or even resources in syndication? Or that you would recommend to people to read?
Yeah, I have a book out there called The 5 Things Every Syndicator Must Know to Stay Out of Jail. That's probably a good thing for someone out there. I mean, look, I learned by doing. So as I mentioned, when I was working in-house for the real estate guys, I mean, we were doing all of these different syndications, and I was working with an attorney back then. That's kind of how I cut my teeth. And then for us, there's one, we have a continuing education requirement, right, that we have to do just like any other professional. And so there's a course that I attend every year in Scottsdale that's really geared towards securities attorneys. And so that's a 3-day conference that we do. So that kind of keeps us, up to date, so to speak, in case there's any new stuff. But honestly, I'm constantly learning. I put out a ton of content myself. And so in order to put out that content, I got to go research the stuff and find out. I mean, one of the best ways to learn, and maybe this is really the answer to your question, the best way to learn is to teach, right? And so I'm teaching, and I'm explaining, and I'm writing, and I'm constantly, adding. So for example, the accredited investor stuff, that just came out, the end of last year, and there's all these SEC updates, and I literally read the rule, right? The rule's like 600 pages. Nobody else reads the rule, but I read the entire rule and I synthesize it, and then I usually put out some content on it. But you just got to learn by doing.
And connecting with the right people, because this is a team effort.
100%. This is just like anything else. It's a relationship. Real estate, more than anything, is a relationship business. So absolutely. 100%.
Yeah, that's good. And what's next for you? What are your short-term goals or long-term goals? Do you see yourself focusing more on helping clients and building the education piece?
Yeah, I'm focusing more on the educational piece. I think that, that's my one gift that I've discovered, and maybe patting myself a little bit on the back. But one of the gifts that I have is I'm able to synthesize these kind of complex securities matters and make them somewhat easy to understand. My good buddy, Tom Wheelwright, one of the Rich Dad advisors, likes to say that I'm one of the few attorneys that actually speaks English. So I'm able to take these whatever concepts and then get in front of a camera and do a video. And that adds a lot of value to people. And obviously, in a enlightened self-interest, that generates people wanting to talk to me and call me. But that's really my calling, is getting that valuable content out to people. And that's what I'm going to focus more and more on. I've got an amazing team behind me. Obviously, I wouldn't be able to do that without my amazing team. I was doing that pre-pandemic. I was actually spending a lot of time on YouTube and doing videos and blogs and presentations and seminars and webinars. And then I kind of went away when everybody got online for the pandemic.
You went away.
I went away. And so I'm about to start, we just hired a CEO that starts next week. And so that'll free me up a little bit more on the day-to-day stuff to spend more time giving, your like your listeners or yourselves, you guys have these questions and I can easily answer them. I just need to have the time. So now that I'm going to have the time to do that, I'm excited to be able to start putting out more content. I don't think I'm going to start my own podcast because I get, so many others, but you'll definitely be seeing a lot of YouTube videos. I'm really excited. I haven't really officially announced it anywhere, but by the time this comes out, I'm sure it came out, I've become a legal advisor for Ken McElroy, one of the Rich Dad advisors. So I've become his legal advisor. So I fly to Phoenix quite a bit now to bang out videos for him. So just putting a lot more content is kind of where I'm going on my end. And then obviously on the investment side, continue, growing that and, growing that to have sort of that legacy wealth that I'm looking for.
Awesome. And I know you mentioned before the podcast that you dabble into other sources of income.
Yeah. I don't know how familiar your audience is with the book, Rich Dad Poor Dad. And so, for example, if you see any of Tom Wheelwright, who's the CPA advisor, any of his videos, he'll be the first to tell you that, the quadrant that I'm currently in is one of the highest taxed quadrants out there. So I have a tax problem every year, right? Because I'm a high paid professional. And so I need to go find investments that are really tax friendly. And real estate obviously is at the forefront of that. So real estate, one of the beauties of real estate is just the tax benefits, especially with the bonus depreciation, the 1031s, all that stuff is just amazing. But that's not the only one. So if you're looking for good tax breaks, the oil and gas industry is a really good play where you can actually end up deducting multiples of your investment. So with real estate, usually you get a 1-to-1 write-off, like if you do it right, especially with the bigger deals. And that's one of the benefits of syndication. But you could literally write a $50,000 check to a syndicator and write that $50,000 off of your income, right? So it's almost like a 1-to-1 write-off because of the benefits. Even though you wouldn't be able to do that on a single family home, you get the benefits of the cost segregation and the leverage, and all that stuff helps you basically do a 1-to-1 write-off. With oil and gas and some other stuff, you can write off 2, 3, 4 times that. So you can do a $50,000 investment and maybe write off $150,000 from your income. So that's the kind of stuff I'm always looking at. And I've just, I actually like the tax thing. So I learn a lot about the tax. Tom is a good friend of mine, so I rely on him a lot. But yeah, I do a lot of stuff with oil and gas, and I do a lot of stuff with precious metals too. I mean, with what's going on and in the world these days, I think it's always prudent to have some percentage of your stuff in precious metals. And so I do that. I haven't done crypto yet. I almost jumped into crypto the last time it went down significantly. And I got a little greedy and I thought it would go down a little bit more. And so I waited. And now, of course, I'm kicking myself a little bit. But yeah, I'm not looking at that. I mean, I'm a big fan of Ether. And, I've always been interested in the underlying technology more than the cryptocurrency itself. And so when I found Ether, that was really what from the beginning, I'm like, wow, this is more a play on the technology. And so I started doing some research. So I really liked Ether, and I got down to like 1,700 or something early this year, and I just didn't pull the trigger, and now I'm kicking myself.
Hopefully it will hit a downturn. And
yeah, if it does, I'll pick some up. Yeah, I'll pick something up.
Yes. And what advice will you give others who perhaps have never done their first syndication but are looking to invest?
Well, if you've never done a syndication and you're looking to sponsor one, my recommendation would be to partner with somebody experienced like yourself or something, and sort of ride somebody else's coattail, kind of like what I did on the legal side. Find somebody who's experienced and just almost volunteer a little bit, or just get a small percentage of the deal, so that you can learn. And then ultimately, once you do a couple of those, you can do your own. And then if you're a passive investor, actually most of my investments are, I don't have time to go. So even though I'm out there looking at oil wells or anything, I mean, I'm again, a relationship business. I get into relationships with people that I know, like, and trust. And then I hand over my money, just like your listeners. I just write a check. But the most important thing there, as I said, it's a relationship business. So the first thing I would do if I'm the syndicator is you got to do the due diligence on the sponsor themselves, right? That's the most important part. I mean, you've got to know who the person who's running the show is, what kind of experience do they have they done this before, how well do you know them? Because no matter how, anybody can put together a really nice brochure and an executive summary, and here's all this stuff, but at the end of the day, somebody's got to execute on that plan. So you've got to really do your due diligence on the sponsor and their team first, I think, first and foremost. And then once you're comfortable with that, then you can go down to the next level, which is, do you like the asset class, right? Hey, this is real estate or single family or multifamily or self-storage or, whatever, do your due diligence on the actual asset class. And then finally, at the end, I would then, okay, now that I like the sponsor, they're competent and they've got experience and they've got a good team. I like the asset class, whether it's, again, short-term rentals or whatever. Now I can actually look at the particular asset itself and determine whether I agree with the assumptions that are being given to me and whether I think at the end of the day, from a risk adjusted perspective, it makes sense for me to invest.
That's good. Yeah. Because some people may just look at the deal and be like, oh yeah, like, sure, let's do it. Or vice versa. Look at only the sponsors.
It's probably the most, we preach this at the Real Estate Guys quite a bit. I mean, the deal itself, the property, the asset itself is kind of far down. It's almost the most interchangeable piece. It all starts with, the marketplace, first of all, right? Like if you're actually looking to buy something or in a syndicator, what's the market? Like, do you like the market where this property is located? Because that's got some macro implications, and you can have the greatest property in the world, but if it's in, a place like Detroit, Michigan or something, where maybe that's now a great place to invest. But, back when everybody was leaving and it was just a mass exodus and there were no jobs. I mean, so that's number one. And then once you find that market, you've got to build a team in that market, which is one of the benefits of doing a syndication. The sponsors already presumably has a team in place in that particular market. So if I'm going to want to invest in Houston, Texas, and I'm just making this up, you've got to have a real estate agent down there. You're going to have a broker. You're going to have a property manager. I mean, this takes time. And if you're busy, it's great to have a sponsor who's already gone down there and done all that work and now has a team in place. But that's like the next level down. And then you start looking at the actual property. Once you found the sponsor of the market, and then you found the team, now start looking at the actual property. But, if this property doesn't work, you can get another property, another property, another property. There's only, markets. You usually don't do that with markets, because you want to start with the market and then figure out the property.
Since this is the Real Estate Home Runs podcast, what would you say are 3 things that have helped you in your personal and professional life to be able to hit real estate home runs, whether it be principles that have helped you or having partnerships?
Yeah, first it comes down to relation. Again, I sound like a broken record, but it's all about relationships, right? So it just whether it's relationships in the team that we're talking. Again, if you're going to do this on your own, all the team members that you need. I mean, real estate is a team sport, right? So just having those relationships, or be fortunate enough to meet somebody like yourself who knows what they're doing and does this sort of, for a living. And so now I'm entrusting you with my capital. So that all comes down to relationship. The reason I do my oil and gas stuff is because I have a very specific relationship with an individual. And then that individual in turn has a really good relationship with really the ultimate individual, right? So it's all about relationship. I think that's number one. Number two, I just in general have sort of this thirst for learning and personal development, which I think has been a huge impact for me. And so I'm always constantly learning, not only syndication stuff and legal stuff, but just on the personal side, how to become just a better person, a better marketer, a better father, a better this, a better that. I mean, I'm constantly wanting to learn, and I go to a ton of masterminds, and I just love that stuff. And that tends to help quite a bit. And then, then I work my butt off. I get up at the crack of dawn. Before the crack, I get up really early. I actually saw a great video today on Kobe Bryant and his work ethic. And I'm like, wow, that's really impressive. But I get up super early. So I just get a lot. It's before most people walk into the office, I've done kind of a full day's work already.
Are you a Miracle Morning fan?
I've met him before. I've got both of his books. I'm staring him right there. So I've met Hal at some event in Dallas, and I think I listened to the audio. But I think I get up earlier than what time do those guys get up? I mean, that must be nice. That must be nice to sleep in till 5. I used to get up at 3:30, but now I get up around 4:30. I would say, and get. I think that's huge. Nobody's bothering you. Even if I'm on the West Coast, even if I'm up at 4, that's 7 a.m. Eastern time. So some people are definitely up at 7. But if somebody tries to reach me at 4 a.m. my time, nobody's expecting a return call at 4 a.m. or 5 a.m. So you have that calm for those first couple of hours that you can do whatever it is. And I tend to use that time, for the personal development, for, my most important tasks. And so by the time, I'm on my third cup of coffee, at 8 o'clock, I've done most.
People are just waking up now.
Yeah, no, I mean, it's a rare day where I wake up and the light's already out. Some people like to beat the sun up. I'm like, I like to beat the light up for at least an hour.
How can people stay in contact with you and learn what you're up to if they have any questions?
Yeah, I'm going to put some pressure on myself because I'm actually came up with I've got a website that's just called Ask Mauricio. AskMauricio.com, Mauricio. Maybe you put it in the title of the show notes. But as it stands right now, it's not there. But by the time this comes out now, I've got a little pressure to make sure that something there. That's the easiest way. I've got a YouTube channel. My website's premierlawgroup.net. There's a bunch of different places. You can just Google my name, you'll find me. But I'm trying to make it easier for people to reach me. And so AskMauricio.com is going to be a place where you can just go in there and go directly to me. So you can access me directly through that website.
Thank you so much. I really appreciated you sharing with my audience, and I learned a lot.
Oh, sounds good. I appreciate you having me on, and it's a great podcast. Thank you.
We hope you enjoyed this interview and got some value out of it to help you in your real estate investing journey. If you can take just a minute, please do us a favor and leave a review. Hit the like button on iTunes or whatever platform you listen to our podcast on, and subscribe so you can hear future episodes. Also, don't forget to check out our Real Estate Home Runs Podcast Community Facebook group, where you are able to connect with some great listeners. If you're an investor who is crushing it and want to share some information centered around passive income in real estate, please contact us. Hit those home runs, and we will see you next time.